Hello, entrepreneurs. Today we're going to dive into the critical topic of small business deductions and the unexpected headaches that they can definitely cause for you and, of course, your business. And the three small business tax write-offs that we're going to talk about are the ones that trigger IRS audits the most. So navigating and understanding how to properly report these deductions is going to help you and your business stay compliant. So if you've ever wondered, if your tax deductions could be, causing a red flag on your tax return, well, some deductions are more scrutinized than others, and knowing how to take those deductions and properly prepare and document those deductions are going to be a game changer for you and your business. So first up is the home office deduction, and boy, what a great deduction this is, right? So for all you great small business owners out there that are starting out, in your home, this is a wonderful deduction if you utilize it correctly. There's a lot of benefits in, working from home. But again, one of the three, it is also one of the most frequently misused deductions out there, and that can lead to some crazy audits. So here's how to properly claim the home office deduction. Okay, for the home office deduction, the space must be used regularly and exclusively for business. So the key word here is and, right? Regularly and exclusively for business. That means that, this room can't be your second formal, room, dining room today, and tomorrow it's not. It can't be a play area for your kids. It is the and word here, guys, which is regularly and exclusively for business. That's number one, to make sure you're safe with the home office deduction. Number two, a proportionate amount of your expenses are deductible. So for example, if you have a 1,000 square foot home and you're using a 10 by 10 room, 10% of all the expenses, right, the applicable expenses are going to be a deduction to offset your income on your business. So it is really going to be important that you do these things, accurately and correctly, because there's a lot at stake here that you don't want to lose. If you have a mortgage on your home, property taxes all of a sudden become deductible against your income. Mortgage interest becomes deductible. You have a repair, you're painting your home, you have a gardener, right? There's a lot of things that you can, tremendous benefit to offset, that regular and exclusive use of your home that's going to save you a lot of tax dollars. And number three, how do we accomplish all of this? Documentation. It is so important to keep clear records of the measurements. How did you get the 1,000 square foot of your home? Maybe you go to a title company, right, and ask them, hey, can I get some documentation? They usually have that. Or just measure it yourself, right? And then measure the specific space that you're using for your business. This is all important documentation. And of course, any expenses that you have, again, mortgage payments, property tax payments, you're paying your gardener, you paid a plumber, you had your house repainted, anything and everything that's for that house, make sure you're maintaining appropriate receipts and records, because remember, we're going to take X percentage of those as an offset to that income, which translates to a humongous deduction that you don't want to lose, right? And this is one way that you're going to get rid of that nasty potential headache if you're ever audited. All right, next on the list of the small business deductions that are highly scrutinized, by the IRS is going to be vehicle expense deductions, right? So again, it is because this is so frequently over-reported, it is constantly on the radar for the IRS. So again, we have to do it. It's a great deduction. It's a super beneficial deduction. We're using our vehicle for business, so it's allowed. But now we're going to focus on how to do it right. So number one, mileage log, right? So whether you're old school and you've got a notebook tracking your mileage, or if you're going to download an app, there's a lot of great apps out there. Just, do some research, see which one's the one that you like best. But get involved with one of these two, options, right? But the important thing here is keeping a detailed log of all of your miles, right? The IRS likes to look at, what I call global mileage. This year I drove 30,000 miles. 20,000 were for business, 10,000 miles were for personal. That's how you should accurately track all of your mileage. Number two, the IRS is going to give you an option, right? Do you want to take the standard mileage deduction or the actual expense deduction? So obviously the standard mileage is every year the IRS will advertise how many cents per mile they're going to give you for business use, and you do the math, right? 10,000 miles times X amount of cents, that's your deduction. However, in our practice, we find that the actual expense method is probably the biggest deduction for your vehicle, right? But for everybody it's different. Do the numbers, see what's best. One thing to remember here is you cannot toggle between mileage and actual expenses. Once you choose a method, you will have to stay with that method for the life of that vehicle, right? Until you say, listen, it's no longer a business vehicle, I've got a new vehicle. Then you're going to have an option to go mileage or actual. But again, if you go actual, it's so important that you have all the right documentation, because there's a lot of things that are deductible, as I mentioned earlier, right? So it's going to be really, really important that you understand which one's best for you, because once you stick with it, you're stuck with it. And the third part of this vehicle deduction, right, is listen, you have to be consistent and you have to be honest with it. So consistent tracking is going to be your best friend, because if you forgot a day here and a day there, you're missing out. And you have to be honest. Things are what they are. Only claim legitimate business expenses. Just track all the information, save the receipts, record the receipts, and that's how you're going to get a great deduction for the use of your vehicle for business. And again, if you ever get the letter that says, hey, we'd like to look at your vehicle deductions, not a problem, right? I've got my log. I've figured out what's best for me, whether it's the mileage or the actual expenses, and I've got a list and copies of all the receipts for my deductions. That's how you're going to win big with the vehicle expense deduction. All right, here comes the third small business risky deduction on this video, and this one comes with a lot of changes, especially in the last 3 or 4 years. So you want to make sure that you're listening carefully to this. And we're talking about meals and entertainment. And so let's jump right into the meals portion, because during COVID for a couple of years, the business meal deductions were allowed up to 100%. So that was a big benefit, but now we've come back down to more traditional limits, which is the 50%. So whenever you're going to take someone out to dinner, and who is someone, right? It could be an employee. It could be a vendor, supplier, right? Obviously a customer, a client of yours. Could be an outside marketing company. Anybody that is going to meet with you to discuss business, right, is going to qualify. And of course, the meals have to be reasonable, right? So there's two components, reasonable and a business purpose. So we just discussed, the people. Now, it cannot be that you're talking business with your spouse, right, or with your kids, unless they are employees of your company, right? Now, they would qualify under the employee rule. But again, reasonable and business related, you get 50% off. Now, I want to go through something that's very important in terms of documentation on the meals portion. There are 5 things that have to be listed on the receipt in order for it to be a legitimately deductible expense. And what are they? Number 1, the name of the restaurant, and that's already done for you, right, on the receipt. Number 2, the date. Number 3, a listing of everything that was consumed. Why is that important? Because, again, the IRS doesn't want to allow you to take a deduction for something that has $500-600 of liquor for a meeting. So again, a listing of everything that was consumed and eaten at that event. Number 4, you're going to have to do on your own, right? Which is write down who you met. Name of the client, name of the vendor, name of the supplier, name of the outside contractor, employee, whatever it is, put the name down. Number 5 is also your responsibility, and that's a big one. What was the business purpose of the meeting? So write down a quick little note, right? Doesn't have to be anything, big, just 2 or 3 lines, 2 or 3 words of what the purpose was for that event, and you're going to be able to take 50% of that meal deduction. Let's jump into entertainment, right? Entertainment, as of 2017 Tax Cut and Job Act, is eliminated, right? So your deduction for entertainment is 0. So if you were to take an employee or a customer out to a ball game, baseball, golf event, something like that, the actual cost of the ticket is 0 deduction. Now, if in the event you're buying, meals and things like that, having some drinks, those are still deductible up to that 50% threshold, right? So again, just because the venue entertainment portion isn't deductible doesn't mean that the meals you're having at the establishment that they're not. They are still deductible. Now, what you also want to keep in mind, in case you ever pay for a a ticket that's, just a flat cost, $400 or whatever that might be. Try and see if you can get a breakdown so that you can allocate some of that ticket value to the meal so that you can get a deduction for that. So that's meals and entertainment. So listen, understanding these three risky deductions, what I call the small business owner deduction, is going to be very important for you, right? Home office deduction, vehicle expense deduction. Of course, we talked about meals and entertainment. These are highly scrutinized deductions. Why? Because they're abused, right? And when they're abused, they get looked at. And unfortunately, when they get looked at, there's no supporting documents behind it. So do yourself a favor. Be honest with these deductions. Use them to your advantage. Have the documentation for everything that you're taking copied, stored away in some kind of electronic file. And if you ever get, the phone call or the letter, right? There's no phone call. If you get the letter, no, just be ready. You have your documentation, and these are going to be three great deductions for you if you use them to the best of compliance. If you found this video helpful, don't forget to hit like, subscribe, or share it with other small business owners. Remember, stay savvy, stay compliant, and keep your business thriving.